Maybe if I unmuted myself, that would help, huh? Hey, Johnny's drinking some wine. I love it. I'm drinking iced tea. Hey, Matt, can you hear me?
Yeah, we can hear you. Morning, Mike.
All right.
Or
Good evening.
Afternoon, Mike.
Morning. Whatever.
Just
Morning there, right?
depends what time of what part of the globe you're on.
Yeah. Almost 7 a.m. there in Sydney.
It is.
Brisbane, excuse me. You're in Brisbane area, right?
Vegas. That's me. Headset's not working.
I love it.
How you been, brother?
Oh, Gerardo, Saki. You like a little timer here, man? A little countdown?
I do, actually. I'm very impressed.
Yeah.
It looks
Hey,
good.
hello, everybody.
Hey.
How are you?
Good, Gerardo. ¿Cómo estás, amigo?
Muy bien, pura vida.
Pura vida, baby.
Ready for another great group coaching session?
We are ready.
All right, we are 1 minute and 25 seconds away.
I know, I'm looking at the counter.
Yeah.
Me on my toes, man. I'm getting a little nervous.
Oh my God.
It is raining hard here where I'm at. It's coming down.
It's because you are there in the middle of the jungle. Here in the city, it's a beautiful weather, man.
Yeah, I know, man. I got the jungle life with all my insect bites and
That's great. I feel jealous.
Come out to Australia. I'll make sure there's plenty of insects around you.
Your insects are dangerous down there, man.
Well, we like to live on the edge.
You got I heard you have the 7 top deadliest spiders and snakes in the world.
Hey, if anyone has a sense of adventure, this is the place to be, right?
Yeah. What's that little jellyfish, the Japanese one that you can't see? It's a Japanese name and you can't see it and it kills you if it gets you.
Oh.
It's like
Irriganji.
Irriganji, that's it.
Delicacy, though.
Delicacy, right? Tastes delicious. Just don't let it sting you. All right, we're gonna get started here in a minute. It's good to have you here, Matt.
Yeah, it's good to be here again, brother. Who could think that, time flies when you're having fun? It's gone quickly.
I know it has. It has. All right, it's top of the hour. I'm going to grab the screen here and we're going to get started with the prerequisite way. And that is to read the disclaimer. Let me just get my screen set up here. Get rid of that. Okay, Henry's coming in. Hank's been active on the boards. All right. Welcome to group coaching. This is the second sniper call of the week. The first call is live trading. This time of the week, the markets are closed. We can relax and we can take a look at things without any kind of emotions, hopefully, and learn from each other. So stock, crypto, and options. Did you know this? Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. You'll have the recording in an hour or two, so please feel free to go back to this if you want to read the balance of this. You've all seen this probably a few hundred times at this stage. I think I've probably seen it and read it maybe 10,000 times, so I could read it in my sleep, and I often do. Okay, we're going to get to a quick market update. Things have happened since Monday. Quite surprising from my vantage point, but as traders, we trade what we see, not what we feel, not what we hope. And I hope it goes down. And so I'm disappointed. My human form is disappointed, but we're just going to trade what we see, and we're going to take a look at that in a few minutes. Before I get started, just a couple
quick. Bitcoin is going down.
Bitcoin's going down. We'll look at that in a minute. Yeah.
Yeah. And
Yeah,
just the
absolutely.
correlation with the market, that was all.
Yeah. Yeah. We'll look at that in just a sec. Yeah. I think that's something I'd like to look. I haven't seen Bitcoin today. All right. I'm going to go to the website real quick and show you a couple things. So when you log in and you go to members and dashboard, some of you are having a little trouble with the WhatsApp. And, you know, I understand it's the reason we use WhatsApp is that it's an international texting tool that allows all of us to communicate live with internet data, whether it be Wi-Fi or cellular internet data. So it's a really effective tool for us to create community across the world. And that's why we use it. So when you go to Snipe, you go into your dashboard, as I just did, members dashboard, you're going to see, all of you will see, well, those of you that enrolled for Snipers and Hedge Fund will see all of these here. There's 5 different products. All right. So Snipers is both live trading and coaching. And I'm going to come back to that in a minute. You also have the Snipers podcast, which is the recordings in audio form. You have the same thing for Hedge Fund and Hedge Fund Live, both the dashboard and then the audio recordings, the podcasts. Okay, so all that's being delivered to you. And then when I first log in, it's Snipers time. I know it's Mondays in the morning, 9 a.m. and Wednesdays at 5 p.m. I go right to my Snipers dashboard. And from there, you have access to the Zoom links, as well as the Sniper live trading recordings that happened on Monday. So if I click that, you can go right into the recording for Monday, 7/18. There'll be a string of these as we go along, of course, and you can always go back and look. When you go into your recording, you have various formats. You got the Fathom link, which gives you the index of all the points made, taking you right to the recording where it was spoken about and shown and illustrated. So that's a really cool way to digest the videos. We also have the same Fathom video on YouTube if you'd rather view from there. And then you can access the podcast as well, the audio version. And then there's also a PDF that you can look at that will highlight. Let me admit.
Hey, Mike.
Yeah.
Sorry, it'll be great if you can take 5 seconds to show how the YouTube link works. So people can know, and they have all the highlights right there too.
Okay, good. Yeah, let's go there. That's a good idea. I'm going to go to YouTube link here. And that's going to log you into YouTube. Okay, so when I go through this list, and there I am talking. And then when you go into YouTube, this is the Fathom recording. And then you're not going to see the indexes. So to see that, you click show more, and then you can see all the different things, all the trades spoken about, all the major highlights of the recording are right in here in YouTube. It's the same version that we have on the website. So you can access the recordings in a couple of ways, 3 different ways. And again, we want to make it easy for you to digest this content in a very efficient way. Okay, I'm going to go back to my dashboard. And here, if you're having any trouble with WhatsApp, all right, you can go to resources here, and you'll notice under resources, you can grab the WhatsApp group link right there, and that will join you to the Snipers group. What is that? Well, under WhatsApp, we have 2 feeds. I have 2 feeds because some people only do Snipers. Pretty much everybody has both, and going on ongoingly, you might choose to just go after Hedge Fund Live. And we have, the posts are fairly similar, but Snipers, this group is focused on primarily on credit spreads. We may even get into some earnings trades. Andrew was talking about earnings on the boards today and the WhatsApp. I think it was WhatsApp actually. And then you also have a Hedge Fund Live. So you want to get in the habit of keeping your eyes on this thing, because we're posting all sorts of comments here. I posted something just today about the mortgage demand dropping to 22-year lows, opportunity in the XLRE. So that's the kind of content that I'll be posting. Matt will be posting. Hank, who posted right here. Hank posted a whole bunch last night. Look what Hank did for us last night. Just really put a bunch of great content there. So the outcome of this offering is community. All of us contributing to the other, generating success orientation, abundance, trading, distinctions, building energy, building momentum. And that's really the outcome of this whole offering that I have. So I just wanted to cover that briefly. When you first come into the site, there's a welcome video and it walks you through setting up WhatsApp. Some people have missed it, I get it. But if you have missed it, just go to your dashboard, hit resources, and then you can grab the WhatsApp group link for each of your products. The second thing you can do from here is add the webinars to your calendar by clicking the link there. So if you want it in your personal calendar so you don't forget, you're not going to forget. Gerardo sends emails right before each call, so there ain't no way you're going to forget. All right, are there any questions about any of that? I like to hear people's voices, so if you can use the chat box if you like, or you can just raise your hand. Let's see, we got here, that's so what are you saying here, Gerardo? You will receive the access to the YouTube link. That's exactly about what we tried to do for you all, Andrew. That way you can listen to the session while you drive. This is, quite frankly, this was all due to Hank. Hank, we showed him we showed Hank the Fathom link, and he said it doesn't run on my Fathom doesn't run on my Samsung or my non-iPhone, and so now you can listen to the recording even more safely than watching it in your car, and you can also access it via YouTube. So it'll work on YouTube, Hank. So you can watch the Fathom recording on your phone using YouTube, using the YouTube link.
It's been wonderful, Mike.
Dude, I'm telling you, it's because of you we did it. I'm not even kidding. I was like, Gerardo, we got a little problem. Hank can't get on the, he can't see the Fathom links. So how you doing today, buddy?
Good.
Yeah,
Excellent. All
Mike,
right.
I'm sorry. Another quick thing I want to mention, right there at the dashboard, they will have a button at the bottom, on the right button of the website, the page. They will have a need support button.
Oh yeah, forgot about that.
So that's really important. Anytime they have any problem or any issue or any request, they can contact us that way, and we'll be there usually Monday to Friday, office work time. But we will try to reply them as soon as possible all the time.
Yeah, thank you, Gerardo. I got to tell y'all, I thought twice about doing that. Then it's like, I'm committed to your support, and for me to do that, so I'm tying myself to all of you all the time. I've got Gerardo to help, of course. Thank God for Gerardo. And I dug deep and I said, what is it that I want to do? Do I really want to provide support? And the answer is yes. And I'm telling you, I don't know anybody out there that there's plenty of people that do live trading, but there's none that I know of that create community around the trading process, the education process, the growth process around becoming a successful trader. I don't know anybody that does it. This group coaching is, I just not out there. It's just not out there from what I can find. Okay, unless there's any other questions, let me check the chats. Thanks, Gerardo. I'll acknowledge Gerardo really quickly here. About 2 weeks ago, I started building this site in February, and 2 weeks ago, I was like, man, this ain't happening. I don't know how we're possibly going to get this done by, was it last Wednesday when we launched, or Thursday when we launched this? And the reason we were able to launch it is because Gerardo, he dug in. We use an engine called Kajabi, and he figured it out and he took control of it. And without him, this would not have been launched last week. So Gerardo, publicly, thank you for doing that, man. I couldn't have done it without you, brother.
Well, it has been a real pleasure. Thank you very much for that.
Yeah, man, you're welcome. John McCaffrey says Hank's post on his adjustments for his losing FedEx trade were great. I'd like to review how he decided to introduce his BWB adjustment and when he decided to remove it, leaving the trade again as a credit spread. Yeah, John, I kind of asked Hank to be ready, so I would love him to take the con for a bit and share a bit about that adjustment. It was really well defined in the WhatsApp group. So yeah, Hank, if you're willing, we'll do that in just a few minutes, buddy.
All right. I got to bring it up on this computer.
Okay. All right. You know, the thing I said this morning is still in the air. Mortgage demand rates dropped to 22-year low. So we're going to come back and look at the XLRE in a minute. Tesla is in the news. Revenues grow 42%, margins decline. Let's take a look at some charts just quickly. I don't want to spend a lot of time looking for new trades, although that's always fun. So here's the SPY chart. And I'm a little surprised. I'm very surprised that the SPYs are now above 390 resistance, now above the 50-day average, now wrestling with 395 support. The markets are on the rise. We've broken through tough resistance. You know, how many times did it fail? 1, 2, 3, 4, 5, 6. 6 failures. And then yesterday, a break above, and then today again. Now we're above the 50-day average. That hasn't happened for a while. And so this leaves me conflicted because inflation and interest rates and recession, oh my. The Fed meets a week from today. By this time next week, we'll have interest rates that are higher than they are right now. So all of that's still going on. All of that's still going on. And yet the markets rise, spurred on, I will say, by the bank earnings, which have come out better than expected. So that's what spurred this rally. I want to look at volume and get an idea. Is there enthusiasm behind the rise? And I just see the volume is about average. So I'm not seeing a lot of conviction behind it. Let's look at the SPYs and check the end of day volume. Look here, on this rise, the volume hasn't spiked up. It's all less than average. This rise above resistance twice up to 395 has occurred on below average volume. Not a lot of conviction. Institutions aren't coming in full boat, adding stocks to their portfolios. That's not happening. So I'm a little suspicious. I'm not worried about our bear call spreads on GM and RUT, which we'll look at in a minute. I'm not worried about them. I do think this thing will fizzle out unless it doesn't. It might keep going and surprise me like I've been surprised many, many times in my trading life and in my whole life. In my relationships, I've been surprised and surprised and surprised again. Here's the XLRE. Okay, loving this. Why do I love it? Well, the whole market went up today, but the XLRE, this is the ETF that tracks retail stocks. Look at this, 42. Resistance, resistance, resistance. Here, resistance, 50-day moving average. It dipped its toe above resistance today and then said, no, forget it. Bearish on XLRE. You know, you want to think about long-term credit spreads, long-term bear call spreads on any of the XLRE stocks. One place to find them is you can go to sectorspider.com. Go right up here to the main page. Find XLRE. I've shown you how to do this before, but let's do it again. You go to portfolio, and then here's all the holdings here. These are all the real estate stocks that comprise the XLRE. Click the CSV file, and then down here, you're going to see it when it finishes downloading. Move my Zoom thing out of the way so I can see it. There it is. And now what I can do, first thing I like to do is put in the XLRE down here. That's the ETF itself. And then all you got to do is click and drag and highlight all of the stocks in the list, Control C on a PC, Command C on a Mac, and then you go right into Tom's tools and you go to lists, website, lists, edit list, pick a list. You got 20, 25 of them. I've already got the XLRE lists built. And then you just Control V on a PC, Command V on a Mac. You copy them in, hit save. And this is a list that includes the XLRE, the actual ETF itself, searchers, single strategy, call credit spreads. Oh, my Zoom window got in the way there. searchers, single, you can also go to Hedge Fund Master as well, but the same scan in two places, call credit spreads, long-term, bearish credit spread, find the XLRE, there it is, and hit search. And there's none today. All right, that's just the way it is. There's none today. I would also run broken wing butterflies. If you're a butterfly trader, you go to broken wing butterfly. I would say standard bearish on this one with a pretty strong bearish prognosis on real estate. Search. And there aren't any. You can go further out in time. If it's not here today, doesn't mean it will be here tomorrow. There aren't any at the moment. But that's a really good sector, I think, to focus on for anything bearish at the moment. The two trades we have on are these two. We placed these on Monday. And if I pull them up, let's take a look. Here's GM. We're down 5%. Why? Well, GM has risen. Now, is GM going to keep on rising? Earnings is coming up in 6 days. GM doesn't gap very much. I'm not too worried about earnings gap. We're at resistance. I'm not worried about this. What I do on these, and this is preface to you all sharing in a few minutes, is one way to handle these trades. First off, note, if the stock goes up fast, you're going to start losing money pretty fast. All right, it's going to start, you might even start getting nervous. Oh God, I'm down $200. The stock's up here at 37, 38, or whatever that is. I'm losing money. What do I do? Well, here's what I do. I have a line in the sand. I know that later, if the stock comes up here, then I'm going to batten down the hatches. I'll drop that 42 call to 41, squeeze out a lot of that risk, and then I'm going to butterfly. So I'm not worried about it. We want to let these trades breathe. You got to let them breathe. And so when do you adjust? That's a good question. For me, it is no later than the short strike, which happens to be 40. See, there's our 40 short call. Now, at that point today, we would be down, come on, what's that, about $325 or something, 350, whatever that is. And that's okay. I'm willing to perhaps lose that, but I want to give the stock plenty of time to breathe. I want resistance to do its work. We got resistance there, we got resistance there. So in this particular one, my eyes go right to, I don't know why, it just happens because I've been doing this so long, but my eyes see resistance. There's resistance right there at the top of that bar. And if I put my cursor on it and leave it, I think my Zoom thing's messing that up. Let's just pull up a stock chart so we can see it a lot better. I'm going to pull up a chart on GM. And we're going to be looking at some adjustments here today. The FedEx is a good example. Hank's been sharing about it. When I go back to GM, look, I mean, I didn't even notice the 50-day average. The 50-day average is holding so far. Let's get some more data here. Let's do 100 days, not 10, 100. And I'm going to hit update. All right, so 40 is here. That's where our short strike is. Okay, here's the high of that bar there. So 40 is my trigger. I'm not doing anything unless the stock hits 40. The benefit of that is you can just stop thinking about it, stop stressing about it, and wait for something to happen. That something is stock closes greater than 40 or greater than the high of that day. It's in the same vicinity. That's when you batten down the hatches, contract the spread you're in, and then butterfly, and then butterfly. And then get your risk down to usually something like 25, 30% of the original risk. So that is the plan. And the reason I wanted to share that, sorry, I just knocked something over. The reason I wanted to share that is I do understand that when these go against you hard, it can get a little freaky. Like, what do I do? Do I get out now? Do I adjust now? So start with a predefined resistance level. If it's a bearish trade, support if it's a bullish, and when that level is breached, then take action. So that's one approach. There's a few others. The other is to throw on, in this case, maybe a bullish broken wing butterfly. So as the stock starts rising, you're making money it's a separate trade now. You're making money on that hedge trade, let's call it. If the stock rises, you're going to make some money and offset what you're losing in this credit spread. Flock of flies, you can put those anywhere you want. They're excellent hedging mechanisms. And Hank, I think you're going to show us one of those. So let me stop talking. This is really about all of you getting support. And Matt, do you have anything you want to add to that? I was yapping away and got excited.
Yeah, no, all good. I just wanted to say that just bear in mind with earnings approaching, we spoke about it the other day on the session, that IB is going to rise, which is going to start pulling those theta lines down into loss territory until it passes, and then it'll suck back over. But the other point to note, and maybe Mike, this is a good point, especially around removing the emotion from the trade, is if you scroll all the way to the bottom, there's a trade plan area. Define what your trade plan is and what your rules are when you get into this trade, and remove the emotion from it and double thinking yourself throughout the process. So you could even type in there, you know, long-term put credit spread, adjust only if it closes above, you know, the prior pivot high or above 40 on the close of the day. Strategy to adjust would be contract spread and fly. And then that way, you know, if you've got 15 or 20 of these things on all over the place, you then don't get conflicted in your thought process. You've got a clearly defined plan from the moment you put the trade on to then help you remain clear throughout your trade management.
Beautiful, Matt. Thank you, buddy. I'm so glad you're here. All right. Okay, the floor is all y'all's. So if you'd like to share, and I got Hank's ready, I think, but if you'd like to share, just go to reactions on the bottom of the, it's right down there on the bottom, it's reactions, and you can raise your hand. And then we can, I can see who wants to share, and then I'll call on you. I need to figure out a way to get everybody comfortable with sharing. I know there's, I mean, it's probably about 50 people on here. I don't know if there's that many today, but we got, you know, a handful of people, and I get that, you know, talking in this fashion can be intimidating. It isn't for me anymore. It used to be. I do it all the time. But don't be shy. Just get out there. Okay, who would like to talk about a credit spread? Or Andrew Taylor, and we got Hank. Andrew, let me do. Hank, are you ready? Can we start with you?
I am. I pushed the share screen.
Oh, I got to enable it. I'm sorry. I forgot to do that. Should work now.
I still see everybody.
Did you hit the green share screen button on the bottom?
Yep, I'll do it again. Okay. Now I can see.
Okay.
Can you see my screen?
We got it.
Okay. As I outlined on the trade last night when I was looking at it and how I tried to mitigate the loss that was being incurred, actually what I used, and I think it's very similar to what Mike alluded to, was I used the charts, and I kind of base it on momentum. And I have my indicators that would be on that chart would be the 21, the 50, and the 200. I also look at that gold dotted lines multi-day VWAP, because I do believe money tries to trace it. It's not so much relative in a long-term or a daily over a year type of chart, but I still use it as a point of inflection when people are gonna or where the price of the stock itself basically oscillates within a zone. And that's what you see all those other lines. The red being, as you can see from if you bring up their chat, was the price riding when it hit its lows. I also have candles that I put in there based on the price action and the strength. So that's why you'll see the red, yellow, green. So
Matt, Hank, let me pause you for a sec, because I'd like for everybody to see what you're talking about. So what I'm going to do is share that post. All this has been posted by Hank, everybody. So it's on the WhatsApp board. And let me find it here. There it is. Okay. So you're referring to here somewhere, right? Look at all that stuff you posted last night, man. Which of these would you like me to show?
Yeah, that you can click that one because that
Okay.
was around the time that we were placing the trade. And like I say, I focus on price action. So the question was, how do you determine? Of course, if it's in a chop, I think it's fine, but see where it's breaking basically the 21. And as I said, I actually, after I started reviewing the trade and the time it was placed, you know what, Mike, what it is, I always put the session on. I'll be more prepared because I'll get a camera put on my tower. The only one I
Okay.
have is my laptop here, so I can break
Okay.
the swim and go through it. But at the time of that trade, you'll note in the notes that I was given that it was actually starting to turn up. Mike, show the other one.
Okay. This one,
No.
this one.
Yes, right there, right
Oh,
there.
Okay.
Yeah.
Now we took it back. There we go.
Yep. You can see like the 21 is starting to turn up. The
What's
blue,
the 21? What do you mean by that?
the green line, and that's
Okay.
moving,
Okay.
moving average is starting to turn up. And then the blue line is the 50-day, which is starting to flatten out at that point. So when I went into this trade, I didn't really look at this. This is when we were in the session, everything. I concurred with you, Mike, on, I thought because of the, fuel going up and the economy, the way it started to turn the overall market and everything. And plus we got basically over an 83% probability. I chose to get into the trade. And this is all live. I took all these live.
Mhm.
So that in the decision process, you can see it's stacked negative. You got the 200 over the 50 over the 21. So in price action chopping, basically within a zone, as I indicated, the 195, I believe it was 215 that I had written. So I was content with the trade. So we can go back to.
Yep. And everybody, the VWAP is something you can put on Thinkorswim, and maybe Hank, next time you could share a bit about that. Oh, I'm sorry. Let me let you share. I shouldn't be sharing. You can share again now if you like. Yeah, we can maybe cover that next week, Hank. Not everybody has the VWAP, and they're probably not following you exactly well. So we can cover that a bit later. So you're just sharing different ways to derive support, resistance, potential moves using another indicator called VWAP that Kenny Glick uses on Money Map Press in the mornings.
Yeah, he does it mostly in a daytime frame. I've utilized it in the past for, like I said, just to know where, for purposes where the money was spent.
Yeah. So there's a question from Dr. John about what is VWAP. Could you just quickly describe what that is?
It's a volume weighted price average. And it's typically, if you watch Money Map, Kenny Click, it actually go on YouTube too. You can see this is that that's where institutional buying is reflected. And at those points of where it crosses or it meets with that line, you'll see normally squeezes that are imposed that will cause it to fire and you gain large movement in one direction or the other. So I use the moving averages in the previous price action because I can go back in history and I will draw those lines and it will indicate to me where there's going to be support and resistance.
So essentially what it is then is institutional support and resistance, a measure of volume and price, buying points where the institutions are playing, where their sensitivities are. So it's another way to derive support and resistance.
Correct.
Right. Okay.
So basically, I was in a trade and we did discuss it. Mike actually indicated one of the charts. How do I eliminate the bar on the top, Mike?
You can move it. just click it on the margins and drag it somewhere else, like at the bottom or something.
Thank you. Got it. So when we had discussed it, this was on 7/6. I almost pulled the trigger. It was a couple days after I think we had been talking, where I could have guaranteed $64 of credit had I done it, and we had a pretty good, run up to that point. So where it did actually come back down, because you can see where it exceeded our upper limit of price risk of the 240. So after that point, it started to drop. I thought about doing this, but of course I didn't pull the trigger. So in talking with Mike off on the side, he's saying, well, you know what? He goes, you do to mitigate or try to minimize your loss. We were also talking about cutting and running. Do I waste any more time? I put on the put spread that you see here on the 6th. So instead of doing that move,
Are you able to show us pre and post adjustment? Go to the date of the adjustment,
that's
turn it
what I'm-
off, turn it back on,
yeah,
that sort of stuff, so we can all follow a little bit better.
we do that, Mike.
Thank you, bud.
So on the 6th, instead of doing that credit adjustment, I put on the put spread to the downside that would possibly give me a hedge against what I did on the call side.
Could you take us, I'm sorry to interrupt you, but could you take us to 7/14 when you made the first adjustment?
Yes,
And let's walk us through the steps, pre and post adjustment, so we can see exactly the steps you took, because it's a little unclear at the moment.
right. Now, did you see that adjustment, correct?
Yeah,
Or
yeah, if you take your backtest date to 7/14, top right,
yeah, that's what I had it on previous.
no, your backtest date on the top.
Oh, okay. I'm doing it via the turn off the hidden legs.
But I want to put the backtest date on the day you made the adjustment.
Yep.
And then you can turn the 7/14 legs back on so we can see pre and post. And when you're doing this, everybody, you want to keep an eye on the Greeks, the delta and the vega and the theta, primarily the delta, because that's really what's telling you how hard you're going to get hit.
Right. So on the 14th, before I put it on, I see you see I had a profit of 122, which if we go back to the original trade, I cut into my loss. Let's go here. Mike. 14. Was 292. So I'm looking at basically, I cut a good 40% into where I was for.
What did what did the credit spread look like at this point?
Right here, Mike.
Let me see. Well, this is the butterfly that you added, right, to the original trade?
Right. This is what the call spread, the original credit spread looks like.
Right. So what's happened here is I'm going to show this adjustment here in a minute because Hank and I did the same trade pretty much. And so what Hank's done here is he stopped the bleeding. He reduced his risk by a lot down to 400 from 1700 or whatever it was in the beginning.
Right.
And now he's losing on this one and he's making it on the broken wing butterfly that he put on in addition to this adjusted balanced butterfly. Just want to make sure everybody's with, understanding. So this is a really great strategy to, the way I think about it, Hank, is batten down the hatches, get my risk as small as possible, and then throw some butterflies on and try to make that back. And so what's your loss here on that you're trying to recover? The max loss, 383.
Yeah, 383.
Yeah, so all you got to do now is make $383 with a broken wing butterfly, an additional trade.
Correct.
And that's what you're showing us now. I got it now. This is great.
Right. So in doing that, you know, I had put this trade on. At the time, you can see the negative sentiment and where it was moving down. So instead of playing, like I said, missing this move here that I did paper trade wise on the 6th would have guaranteed or locked me into a 64 credit, right? We were both, you know, at the time we were kind of going back and forth. We felt, well, you know, it's going to go down because we thought we were going to be hitting some resistance. So to fix it, like Mike said, I got it down to the 383, mitigating the hardship of the first one. And then I put on this on the 6th, that same day. Instead of doing one, I did the other. I put this put credit spread on to the broken wing butterfly. And then by the 14th, on that day, I had accumulated basically $122. Let's refresh this. Just at the 14.
And so what you did there is you, just so you can, everybody.
There,
You
I made that adjustment on the 14th. I went
hold on a minute. You contracted the upper spread.
correct.
Right. Okay. That's what I want to make sure. Okay, good.
And I made the adjustment. I contracted the upper spread, which then gave me a possibility of the $366, which is basically I'm breaking even if we ride this out for 8 days. So what I did is then on the, of course, on the 19th, by the time we got there, I can go ahead a day. It's tracking real well. Obviously, you see the jump because it starts to come up. And at this point, you know, we converted it to the put credit spread. With 4 days to go, looking real good. I actually almost pulled it here and said, you know what? I got real close, basically looking at $100 loss overall. I'm good.
Yeah.
And then what I did is when, just to walk you through the 280 and thought it went down, then 350 and I said, good night. I took it at that point.
Just to make a
Was that-
correction, I misread your adjustment. What you actually did is you closed down the upper spread, right? So you sold your long put spread up top. That's what that was, leaving a put spread underneath. It
Correct.
wasn't a contraction, it was a closing. And then you turned it into a credit spread and you made 366 on this one. You lost, you know.
Made 350 because I had it set, you know, I had it set up when I did end up closing, my goal, like just said, I like round numbers, 350. And of course the market hit, you know, when I had it set up to do on the side, I heard the ding and got all happy.
That's one of my favorite noises, man.
Yeah.
I love that noise. Usually I love that noise.
And I, as I wrote in the blog there was, I'm telling you guys, I have up until this point, I mean, I've had a relationship with Mike for quite a while, as I outlined in the bio, and I would have hesitated to do these moves like I did that first one. The other thing is I'm not full-time. I know if I was full-time and I had the focus and everything, I'd be smacking the heck out of this. Seriously, I'd be owning it. And Mike knows I'm a big back tester. I'm constantly running out of room on Tom's tools and having to move files and stuff. And I like taking different trading strategies, which I've learned, back test them and playing with the deltas as well. And I mean, when you get a little more educated, you get to understand all this by playing with the deltas, as Mike has taught me years ago, and that you can actually increase your odds. And that's what we're looking for, is the odds on the trade. I'd rather have high probability and lower money. So risk management wise, it helps correct it. But hell with the tools that we're now demonstrating or the strategies we're looking at, taking butterflies and converting them to spreads, credit spreads. And like Mike said, and I remember, Mike, what was this? It was less than a year. I said, yeah, I'm not too cool on butterflies, Mike, even broken wing, right? Remember I said that day, I said, I'll stick with spreads. And then we got into doing all this and started showing us, like the light bulb went off and it was like, holy crap, this is excellent. You know, because just what we demonstrated here, this is real money that I was playing with. I was able to come away with basically a break even on a loss that was significant with a much higher risk of over $1,700 if it had really gone against us, and it did jump over that line. So, you know, I would have been liable for that. So, like I said, this is just, and I've picked up things with just people making comments. It like flips another switch for me, and it lets me think of something else, you know, and then I'll go back through my tools and I'll, you know, in different methods. One of the things I know in order to be successful in the long term is you got to get a plan, you got to stick to it, right? Consistency, discipline. That I lack. I got to be honest.
Well, how human of you.
Yeah, I'm probably in my life, I probably tried to do too many things, you know, because I got family, I got my kids, you know, they're all grown now, and I got the grandkids, and I live life to the fullest. So, but to really, I mean, to retire, which I can see the light at the end of the tunnel coming. I could do this, and this would entertain me, keep me happy. I'd be making money, providing for the family, not touching the base. And I mean, this, like Mike knows, I just can't say enough about it. And this setup, this forum that we actually have, just the last couple of days playing with it, like I said, I go into my deep thought process and I start looking at everything, and it's like, I mean, this is a huge advantage for us, huge. And what it is, you put in the reps, it will come. I mean, I've been doing.
Excuse me, Mike. Oh, sorry.
No, go ahead.
Mike, can I say something? This is
Sure.
Peter.
Hey, Peter.
I saw that post last night, so I kind of did simulated that trade using contracting the wings, and also the same way what he did by removing that Berkel spread, and seeing how both trades would turn out. And this particular one turned out as a profit. The other one we would still have as, I believe, small loss. I don't remember right now, don't recall right now, but because of the movement up and down, we would probably still end up with a very minimum loss. That's all I noticed by doing two different adjustments of this trade. What you guys discuss about.
Peter, I've known you for 2-3 years now. You're talking a different language, man. It's beautiful.
Yeah.
You didn't talk this way in January. Well, when I saw you last year, whenever we had dinner, you're talking a whole nother language, dude.
Now I speak English.
No, I mean trading language is what I mean.
I know I'm pulling you
okay. All right. So we got a couple of questions here. I thank you, Peter. Thanks for your comments.
Thanks to you guys.
Yeah, you're welcome, buddy. Hank, there's a request to post those trades on the forum. If you could, you could just, you can share it via the URL link. I can help you with that if you like, but if you wouldn't mind doing that, there's been some requests so they can see all the moves you made.
Okay.
And we can put, I think maybe better on the discussion forum would be a better place to place it than WhatsApp, if you wouldn't mind. We'd appreciate it, man. Hank, thanks so much, man. Appreciate your contribution and your heart and your love and sharing your life with us a little bit. Really great, man.
I have to admit, it's easier writing it than it is presenting it.
Hey, welcome to my world, man.
I should make my footnotes just bullets so it gives me keys on track.
You know, I
Thank
used to
you.
teach with
That
a
was
guy
awesome.
named, yeah, that was really great. Hey, Peter.
Hey, Mike.
How you doing, man? Good morning.
Going glad. This is awesome, guys. I think it's fantastic. And the step up has been, from what I've seen now, wow, amazing. So well done.
Yeah. Thank you. You know, I used to teach with a guy named Nick Gazzolo. Some of you know him. And he used to say, trading is the cleanest form of adult entertainment. And it's true. It's like I'm painting pictures. My job is to paint pictures where I can put money where I want to make, where I think the stock's going to go, and move my risk and paint pictures. And it is the most delightful game. It's the best way to have fun. One of the best ways to have fun. There's a few other better ways, but that's a good way. All right.
Hey,
John,
Mike, there's a question. Yeah, I think you're just about to touch on it actually from John. And Hank, thanks for sharing. That was fantastic. And I think, you know, the participation of everyone on the boards and WhatsApp and everything, and the trade sharing it's fantastic. But Hank, John's asked how you actually selected your original butterfly. How did you select the strikes and the adjustment? What was your decision-making process around that? Did you find that trade or that adjustment with a TTR tool, or did you just look at an option chain? Could you talk us through, you know, your thought process there?
Yeah, what I did is I did use the tool for the broken wing to find that put spread. And then what I did is I looked at the charts, the price action, and then I assessed the deltas on the different options, and what gives me what I feel as a, you know, an effective trade. And you saw it was like $52 to put it on. So it was basically a hedge that wasn't costing me much. It actually paid off. And at that point, that's like when I was talking to you, to me, it's almost like looking at it, like I kind of referenced, like looking at a pitch. To me, I'm kind of like Mike. I have a feel for the charts type of thing. It's not, I don't have like a technical indicator or as such. Like if Tom's tools didn't turn up that trade, I would have been looking in that area anyway. You know what I'm saying? It makes it easier because once you get that from the tool, you can make the adjustments with the edit, and then you can actually see and formulate your plan for it. And that was something that I put on, whether it worked or it didn't, it was just going to close out, you know? So I wasn't concerned, you know, at the time. And I was wondering, Matt, I mean, technically, I'll start to make notes of the whys when I do it. So that way, when I post, I'll actually list those. This is why I chose to do this or take these actions.
yeah, that would be great. Yeah, thank you.
Yeah,
Fantastic.
I don't have, I guess I should develop like the trade plan like we had in the past, right? And I had detailed that up for you in the Word document when we were doing the one-on-one coaching.
Mm-hmm.
I'll do that. I'll start to put down, because remember I evolved just working with you, and after doing about 200 of them, changing that slightly. And what was the win rate in that? That was like, I should go back to it.
Yeah.
It was like 89%. It was a moneymaker. And I mean, we were doing it live as well towards the end, and it was still holding the same results.
Mm-hmm.
So
Excellent. All right, buddy. Thanks so much, man. Thanks for the contribution to everybody. It's really great. There's quite a few questions here. And Andrew, we're going to get to you in a few minutes. One that I saw was, how do you scan for these broken wing butterflies? And let me show you a problem that we have. So here's what you do. For example, if today you wanted to put a bearish broken wing butterfly on FedEx, there may or may not be one in the scan. So I don't even know. I'm going to look. I'm going to go to searchers, hedge fund, broken wing, and then I'm going to go looking for FedEx butterflies. And I don't know if this is how you did it, Hank, but this is how I do it. Can I get one for 0 debit or a credit?
Yep.
I would like one, please. Are there any? Nope. How about, all right, I'll pay a little bit. Are there any? Nope. All right, I'll pay even more, maybe even put the further down, more time. Are there any more bearish puts, more broken wing butterflies? And there are. And so that's the progression that you want to go through. Now, if you find that there aren't any, you can also use a surrogate. You can find stocks that might be correlated to FedEx. You might use the sector that FedEx is in. You could go also to stock rankers, or as analysis, I think, where is it? Correlation. Look, there it is, correlations. And then from here, you're going to want to watch that, just read the help file. But you could say, all right, I want to find stocks that are correlated to FedEx. And I can scan it against the penny plus weekly. If you happen to, I don't even remember what FedEx sector FedEx is in. I think it's industrials, if I'm not mistaken.
It's airline.
It's airlines. Okay.
Yeah.
So I could go after FedEx against airlines, click analyze, and then I can see what stocks are correlated and by how much. And I look through this list and I don't see any of that. I mean, this one on Delta Airlines is correlated to 71%. So that's pretty close. And if I don't see any there, then I can go after, well, maybe I can look at market indices. Maybe FedEx is correlated with one of the market indices, or maybe it's correlated with the ETFs. Find an ETF that FedEx might be correlated with. And you can go scanning and find correlations. I like 90% if you can find them. And you might not, but that's another approach. You could, let's say, for example, that we discovered that UPS, I mean, that would be one to look, wouldn't it? I could actually
Pennies
check.
to weeklies, Mike.
I could also just look at UPS, the actual stock, right? So are these correlated? I'll look at the pennies in a minute. UPS, that would make sense. United Parcels, DHL, we could look at as well, and we could see how correlated. They're not, that's surprising. They're not that correlated. Or the penny plus weekly, as Hank's pointing out. And so you can go looking. Are there any correlations? And just look for 90%, 85, 90%. There aren't any in this particular case, but that's the idea. So you find a stock that moves with FedEx and then throw a broken wing butterfly on it. That's another approach. If you can't find a broken wing on the stock, you want to hedge. I want to show you something really quickly here. This is how I handled FedEx. I've covered this before. I think I even covered it in one of the last hedge fund live calls 2 weeks ago. But look, this is what I did on FedEx. I had the same trade. I was waiting for the stock to breach this high here, which was 240, which is my short strike. And I was waiting for 240 to be breached. I didn't do anything on this day, even though the stock touched 240. I said, I'm waiting. I'm very clear. I'm not doing anything unless the stock reaches 240. And if it does, I'll take care of it. And then the stock hit it, dropped. And I'm like, all right, I'm cool. And then earnings comes out. And my first thought was, oil is rising. There's no way FedEx is going to blow out earnings. And then I slapped myself around a little bit and say, wait a minute, what if it does gap up? I could lose more money than 365. And so that's where I chose to what I call batten down the hatches. All right, so let me turn on the adjustments. Batten down the hatches. This is a simple, straightforward way to do it. Is you basically what you do is you contract the upper spread. That's what these pink ones are. The blue ones are to add what's called a long call spread or a bull call spread, converting this originating trade into a broken wing butterfly. And now my max risk is 377. I can only lose another $62 in the trade. What does that feel like when you're already down 315 and the most you can lose is another $62? Do you feel better? Yeah. And you delta neutralize. So this is what Johnny had a question about this. Look, this red line is straight up and down. It doesn't matter where the stock goes, pretty much. I'm not going to lose much more. I've neutralized the impact of direction. Delta neutralized. And now I can breathe and I can wait. Stock can go anywhere. If it hangs out here, great, I can make some money. If it tanks, worst case, I'll lose, what is it again? 377. So there's the risk management part, but there's also the psychological part of it. And you want to really practice this if you haven't already. Now, what you could have done, what I could have done here is what Hank just demonstrated. I could have put a bearish broken wing butterfly here and or a bullish broken wing butterfly up here, hedging the risk in this and just let the whole thing run free. You're going to make money somewhere if you do that, a flock of butterflies. Now, the only way you're going to learn how to do that is to practice. Now, here's what else I did. Well, first off, I made a mistake because I was doing too much. I was building my website and all sorts of stuff, and I missed my opportunity to adjust. So my originating plan was if the stock breached the low, this 220 level, which happened the day before, that would have been my signal to slough off the losing spread, which in this case would be the bullish one. This spread down here needs the stock to rise, so it's losing. And so even though I did it a day late, what I did do was simply to close out the spread that I had bought before. And by doing it, this is what I ended up with. My risk, my managed risk drops to 178. Now I still have more risk up here to deal with. And so now I'm looking at, you know, even with the rebound, I think this is going to be safe. That strike there is what, 240. It's still the same 240 strikes I had before. So now, as long as the stock stays below 240 between now and expiration, the most I lose down here is 178, 177.
I had saw that, Mike, and I didn't do it just because of the loss.
Yeah, there's the risk to manage. Yeah, absolutely.
Yeah,
So
you know, I think it was 2 days ago. It could have been like $64 loss or something. And I don't know. I haven't seen. So that's advisable. If you see that, you got to keep an eye on it until expiration, because like you say, you got to watch the top side. But
yeah.
okay.
Yeah. So and this is and when you do this, I've got what, $1,100. I'm still down. I started with $1,700 risk up there, but I still have risk up here. So this is another instance where a bullish broken wing would be a really smart idea in case the stock starts rising up. And I can always sell a put spread underneath or convert this to a butterfly later. There's more to do. The stock has run up a little bit since, and I'm not worried. I'm not worried about it. So that's another basic approach. There's a lot of ways to do it. I'm thinking about another way. I was talking to Clayton about it today, and Matt as well, where you start with a bearish credit spread that's 2 strike points wide, and then throw on a put credit spread that's also 2 points wide. And in the event, this, for example, if I take you back to 623, I'm going to demonstrate this next week. I don't want to waste time here because I'll come up with an example next week and show you. I'll take the same FedEx trade and put iron condors on it. And now if you do that, there's two sides to manage, but you get a lot of facility to squeeze risk and you know, manipulate the credit spreads. And I'm going to demonstrate that next week. Okay. Thank you so much, Hank. Matt, are we getting all the questions here, buddy?
Yeah, there's been a few questions flying back and forth, which is good. Johnny was just asking, you know, about the cost of a hedging trade, and fundamentally it comes down to, whilst you might pay a little more by going further out for those hedges, it's important to look at how much you're going to pay for a hedge to make sure it doesn't absorb too much of the profit out of the trade or your overall trade plan, so you don't end up at a net loss overall. But also look at the Greeks and how that hedge is going to perform and make sure that it matches up with your prognosis or hedging prognosis in your position. So that was a really good conversation that we had going on. Also around spread contraction and whereabouts that should take place, depending on whether it's a call or a put credit spread. But contracting is a great way to squeeze risk out of a trade or a losing trade. So definitely something if you haven't played with we encourage you to do so in TTR and have a look at it. Also encourage Johnny, he's got a trade at the moment that isn't in the best of shape. So if he's comfortable, have encouraged him to share that on the forums, and as a community, we can give some ideas and some context around that. And that's pretty much, oh, David has just come up with one. If you convert to a fly, could you create profit potential?
Yeah, let me answer that. I saw that as well.
And just a reminder, Mike, Andrew Taylor still has his hand up.
I know. We're gonna take care of Andrew next. Let me take you to our M today. Let's go to the latest. And so the stock's making a run. I need to start thinking about this. The question was, could I convert this into a butterfly and create profit? Yeah, the idea here would be to convert this back into the same trade I had before. That's going to cost a bit of money, but it will mitigate the risk up here. Quite possibly, I could buy the call spread back or sell a put spread with the same strikes. So for example, reselling the 240 put and then buy the 230 put as well. It doesn't matter, everybody. This is one of these crazy things about options, is you could either buy a call spread or sell a put spread, substitute calls for puts, and it's exactly the same trade. It's exactly the same trade. So sometimes you get a benefit with one over the other, and it's something to try when you're doing adjustments. So yeah, the answer is yes. Hey Matt, you know what I got? I've got a coaching call that I'm late for. Could I just leave this with you to wrap up today?
Yeah, sure, no worries. What we might do is we might go to Andrew to get him to share, do a bit of an open mic, and then yeah, we can wrap up for the day.
Go as long as you want.
Fantastic.
I know you got things to do today, but anyway.
That'll be good. Okay.
All right, everybody. I will see you Monday morning. Well, I'll see you tomorrow. If you're coming to Hedge Fund Live tomorrow, Hedge Fund Group Coaching is tomorrow, same time, 5 p.m. Eastern. And we'll come back at it again with butterflies and matadors and all those sorts of good things. All right. Thanks, Matt. Thanks, everybody.
Thanks, Mike.
Thank you. Hey, Matt, before you get going, I got to check out also. So I'll pick it up on the recording.
Yeah, no worries, Hank. Thanks very much. And thanks for sharing all your content today and everything in the forums. It's been fantastic.
Oh, thank you. Thank you all.
Fabulous. Okay, wonderful. Have a great day, Hank. Andrew, over to you to share the trade that you've got.
Actually, it's not about a trade, but a comment on Thinkorswim. One of the things I do is I will create alerts for myself when I get into a trade, and I'll put comments in there, and I'll put in a dozen alerts on a given stock all over the place, so that as the stock moves around, if it hits one of the trigger points, I get an email reminding me of, well, what's the trade going on? So I will do that in Thinkorswim rather than putting comments into the Tom's Tool trading plan, because it wakes me up when the stock does what needs to happen.
Of course. And that's a great idea. And especially getting the email trigger alerts or subsequent actions and even breaches. So one of the things, to your point, that is very handy to have is, especially when you've got to coincide with your trade plan, that automated alert, that you have to take an action. I suppose one of the things that I'd encourage people to just remember is, if your rule is to adjust based on the close of the day, intraday price action might trigger one of those alerts. So just keep that in mind to see where the close of the day is on those particular trades. But Andrew, a great way, mate, to make sure that everything's automated so that you can stay on top of it.
Yeah, I don't know because I noticed one of the comments in the chat was that people outside the US can't get at Thinkorswim. So I don't know what other platforms have that kind of automated facility. Maybe there's something out there which is not a brokerage, but it's just a platform that shows stock charts. You might be able to get the same kind of thing from one of those.
Yeah, And being based in Australia myself, we're precluded from using Thinkorswim. So I've used Schwab and Interactive Brokers before. And I do know that their alerting abilities vary between the two platforms. But I'll have a chat to Mike. And for those of us that are based in Australia and can't get Thinkorswim, I'll have a chat to him and see if he would be comfortable for me to maybe do any demonstrations and things on that alternate platform for the Asia Pacific group. So that way we're getting some education across platforms as well.
Okay, and that's all I had.
Wonderful. Thanks, Andrew. Appreciate it. I thought I saw another hand up, but
Larry,
maybe.
Larry.
Yes, it was you. Thanks, mate. G'day, Larry.
So I just want to clarify. So when I like your comments that when it reaches that point, take all the emotion out of it. Don't look at the news. Don't do anything. Just get out of the trade or change the trade. But when you go to one of those support levels and it hits the support level, goes past it, you narrow the trade. You take the risk out, but then you create a delta neutralized butterfly. Is that correct? Neutralized, right?
Yep.
So then if you wait to then a separate trade, you may put a butterfly at top or bottom if you want to make some money, so to speak. But first thing you do is shorten the spread and create a delta neutralized butterfly. Correct?
Yeah. So you can contract the risk, so squeeze the risk out of the trade, and then you can delta neutralize that position to give yourself some time, give yourself an opportunity to see where the underlying is going to go.
Okay. So when you're creating another trade, then a few days down the road, you see that it's taking off one way or the other. Then you could either get rid of the credit spread or put spread, or put a butterfly top or bottom. That's kind of what we're talking about doing, I guess.
Yeah, correct. Yep, you could even put on a separate trade exactly to what you said. So you can go and put a broken wing up the top or down below. You could adjust that price delta neutralization.
That's only if you find those trades on Tom's tools, right? It's only if you find. That's only if you find a broken wing butterfly on Tom's tools.
Correct. Or if you feel comfortable, you could go and build one yourself and add an option chain and see what that looks like.
I don't know who made a comment in the board. It was a good comment that with the call credit spreads, someone made an 80% success rate, and by going to sleep and leaving it alone, and don't do any adjustments, you're still gonna make good money. We're spinning our wheels, but that comment was well put. That you can have your put your delta neutralized trade on and just go to sleep and don't do adjustments, and you still do well 80% of the time. So that was a good comment. I think someone made that. That was a nice one.
Yeah, I completely agree.
Also, I like your approach so far. This is really nice that both are working together rather than you're looking and he's looking. That's what he just said. That was really nice on Monday. That was good forum.
Oh, thanks.
It was a good session. I liked it a lot. That was good.
I think it's a fabulous forum. And Larry, you've been around, what Snipers was some time ago, as has Carla and Kathy and a number of others and Peter. And I feel that this forum, is a great evolvement of what was already there. So it's good, and it's a great community, and we're loving the engagement on the boards. Obviously, being on the other side of the world, the timing throughout the day, especially in US time, for me is a little hard to respond. I've generally got my eyes closed, but love participating when when I can.
So one other thing is, if you just followed what he did and did his trades, you would have done well financially. So I tried to do my own stuff, and I didn't do as well. So my point is, on Tom's trading room, he would send alerts. Hey, General Motors is taking off. All right, X, Y, and Z. But I guess from your perspective, you don't really need to wait for alerts because you're going to set your max and where you're going to get out of the trade anyway.
Yep.
So
I trade to my rules.
Right. Okay. That makes sense. I like that.
Because remember, especially with that trade, as well as I've said a number of times, even if the stock doesn't move, so let's assume that the delta doesn't change, Vega is against me in that position, and it will rise coming into earnings. Now, GM rises about 5%, so naturally it's going to crush that position. But with the stock netting a 0% delta move through earnings, so it doesn't move through earnings, I'm not concerned about delta hurting me. What I'm cognizant of is IV crushing before earnings, but then that will recover afterwards. So long as GM doesn't take off to the races, I'm not too concerned. So I would only adjust that position. I think it's 39 short, 40 long on the one that I've got. It's only if I get, and my rules on that trade would be, if I start getting in trouble, if I get a close above that 39 short, I'll start making some adjustments to that trade or delta neutralizing it. And when you start looking at doing a butterfly, especially right on earnings, the risk there is, yes, the IV can come out, which would benefit, which would crush the fly. So that's a concern that I've got as well. So I'd need to think about that adjustment, but I'll publish those adjustments as they happen. And I will review that trade with everyone as well and show you what's happening with it.
Would be nice the next time that they put a spread on like that to say, you know, this is my risk level. I'm going to go to this point. I'm going to neutralize it when it hits that point, just to re-educate us as well, rather than just put the trade on. Say, listen, this is my resistance. If it gets above 40, I'm going to delta neutralize and squeeze the risk out. So it'd be nicer to say that, because we haven't really done that as much as well. We're picking our numbers where we want the credit spread to start and shorts and the long positions. But it'd be nice to say, you know, if it hits above the 40, that's where I'm going to neutralize.
Sure, and that's the trade plan. So one of the biggest learnings I've had in my trading journey is the trade plan and sticking to the rules. They're the two biggest things that I've had hammered home, and that's what I do. And don't get me wrong, have I broken the rules? Yes. Has it bitten me every time I've broken them? Yes. So, you know, it's part of the learning process.
Okay, I appreciate it. Thanks.
Thanks, Larry. Sorry, Peter, I think you've got your hand up.
Yes. Just quick question. Last week's session, Kathy, I believe, was the name of this lady. She mentioned some strategy that she's using on SPX or XPY in the morning and the last hour of trading, I believe. I think you were working on putting it from her description.
Oh yes, building it.
Is there any way we can see that and see what actually she's thinking of and using as a strategy?
Yeah, I'll go back and review that. What happened at the time when I was building it in the live session is that the data integrity for the theta lines was off. So it was showing that both trades in a loss, which wasn't the outcome of the trade. So it was a data issue in TTR, which actually happens a little bit on the SPX or the SPXW things there. So I will go back and review that, see if I can build it to see if those theta lines are correctly reflecting what the outcome of that trade was. But the reason I didn't present it is because it wouldn't have properly represented what the outcome was. It didn't look right.
I get it. But what is the strategy she's using? Just in
from memory, it was selling. No, it was a short-term on the day expiring butterfly. From memory,
selling butterfly,
buying a butterfly,
buying the butterfly.
Yeah, expiring on that day.
Mm-hmm. Okay. If there is any way we could see what she's doing and you know, maybe learn from it, that would be great.
Sure. No worries. I'll take a note and I'll review that trade, see if I can rebuild it.
Okay.
And we'll have a chat to Mike and see if that's something we can have presented.
Super. Thank you so much.
Terrific. I'll just go over the comments here. Matt, what is a good place to learn the Greeks? Any terms like delta neutralize? Yep, great question, Venkat. So we can unpack those in these coaching sessions to tell you about the Greeks. I'll have a chat to Mike around maybe a separate session on how we do that as well. And trust me, it's something that I struggled with for some time, learning what they are, but they're very important. And when you can learn to master them and understand them, your trading will thrive. So leave that with us. Andrew, demo on IB would be much appreciated. Yep, more than happy to help with that. I'll take that back to Mike as well. Johnny, IV crushing before earnings. I think, Johnny, what that relates to is that GM trade we were talking about. So IV will rush in before earnings, but bear in mind with a butterfly, okay, it eats IV for lunch. So what I don't want to do is put myself in a position where I could make an adjustment, and then as IV comes out of that position, it flattens any profit that I have in the trade. So that was my point around there. Andrew, IV rushes, IV falls crushes after. Yep. Paul, good night. He had to leave. No worries, Johnny. Balance butterfly expiring the same day. Oh, thanks, Steve, for clarifying that. That's great. Fantastic. Oh, Kathy, hello. You've got a question. Hello from Canada.
Hi there. I just wanted to comment that the butterflies, sometimes there's such a change during the day in the buys. I'm finding it a little difficult to backtest some of the strategies because I check sometimes during the day and the numbers are crazy to close the butterfly. So it really depends on being able to monitor it, I think sometimes. Have you found that to be the case at all? Anybody with the butterflies? Yeah.
Yeah, slippage on some of these can be a little bit treacherous. I know there's some indices. I think UVXY was one of them. Oh, there's another one that the slippage on those individual legs can be quite large, and then when you combine it into a fly, so you've got 3 legs, it can make it very tricky to get in and out of these trades. Volatility naturally plays a part in that as well, and given the erratic action in the market at the moment, some of that will be heightened. But I agree with you. I think, you know, having to work that spread a little bit and maybe moving towards the natural price should yield a better fill. But bear in mind, there's a term that I heard in the Calendar Mastery with Jeff Beamer, and it is the term is this, and it stuck with me. It's called a roach motel trade. Some of them can be easy to get into, but very difficult to get out of. So just keep that in the back of your mind, that whilst you might have to work a spread to get into it, if your slippage is quite wide, also think you've got to get out on the other side of that trade as well. So that's something to keep in the back of your head. You might have to work to get into it. You might have to work twice as hard to get out of it. So just be cognizant of slippage.
Yeah, sometimes it's pretty impossible to get out. But one thing I've found is sometimes you can sell a portion of the butterfly, leaving one bull credit or bear put spread. It's sort of the other way around. They're called bull put. So, like, for example, I just found that by looking at the create orders sign on Thinkorswim, and it will give you this opportunity to sell 8, 18, and 10 out instead of 10, 20, 10.
Right.
You're selling 8, 18, and 10. So you're leaving one credit spread.
So you're ratioing.
So it's pretty cool. The numbers are hugely different. There'll be a sell the butterfly for 7 cents and sell this ratio, you called it, for 17 cents. It's nuts.
You just want to check your risk on that as well, because you've got more sell legs. You've got 2 more sell legs than your buy legs. So I think it's great. I'd encourage you to build it in TTR and check what the risk profile is on it.
Well, that's a difficulty because it's really hard to figure out what the cost is per leg. Because when you're in Thinkorswim, they just give you a credit price of 17 cents. Well, you don't know how. Well, you couldn't go back and look at those legs, I suppose. But to try and duplicate that in Thinkorswim is not as easy. I could, yeah, I guess you could.
Yeah, I'd have a look, because you can build off an option chain in TTR. So if you're getting an 8, 18, 8, I'd go and build it and see what it looks like, because you don't want to put yourself in a position where you're getting an amazing credit, but your risk is 2 or 3-fold of what your risk profile is to trading.
This is just to close out. This isn't to open one.
Oh, right. Okay. Sorry. So you're not selling a fly. What you're actually doing is selling to close.
Yeah. Yeah.
Okay.
But it's worked. Just looking at it, sometimes it wouldn't have created any great profit at the end had I not done that, and yet just catching it in the middle of its life, it has more than one day.
Yeah.
So
and GTC orders can be good for that as well. You know, you could put a GTC order in and just let it sit there. You know, a sell to close GTC for a number, and if you get those erratic price swings, and if those prices come cross books during the day, you might fill. So that's
a good
way to do it as
suggestion.
well.
Yeah, that's a good suggestion. It's a nice way to, and there's a little bit of directional prognosis in there. You want to make sure you're close, you're keeping the one that has more possibility, which side of the butterfly you're keeping.
Of course.
Yeah. So
fabulous. Thank you, Kathy. Appreciate you sharing. Okay, everybody. Look, we might bring today's session to a close. Thank you, everybody, for your participation and sharing. We're grateful that you can attend. As Michael say, thank you very much for being part of the community. Thank you for your business. We love working with you all and ensuring your trading success. Have a wonderful day or a wonderful evening. I'm about to start my day, and look forward to seeing you all on the next session. Have a great day, everybody.
Thank you, Matt. Thank you,
Thank you.
everybody. See you tomorrow.
Bye.